What is good? What is good, guys? This is not even Monday. It is Friday the 15th, and I still managed to, did a little bit of review, the review of the market on that day. Should we get straight into it? So let me go check for Forex Factory in that day, cause I remember it was something like core retail sales or something. From what I know so far is that retail sales are actually quite important for stocks. It's like one of the main indices to determine whether stock should short or long. You see, core retail sales per month happened at that time. So last month it was a bit bullish for the stocks. It was a bit bullish for the stocks, but on that day it was a bit bearish. Not that strong of a bearish movement, but we can have a bit of we can have a bit of what can I say, like a bit of we can have an image of a narrative in our minds. Prelim consumer sentiment, I don't really know what that is, but I suppose it doesn't have that much of an influence on it because I haven't heard about it that much. I'll do my research on it. The fact that it's not at 1:30 p.m. just shows everything. Oh, these are Italian time though. Today I'm in Rome, guys. Um, Rome is actually it's not overrated. It's actually very cool. Like all the architects and that. It's pretty solid. Um, I rate it like 9 out of 10. But the people here, it's too much. The heat is calm because I was born in Vietnam. Like I know the crazy heat that it can get to, but let's get straight into work. Okay, so what is blue to be again? So blue is I got my new color code. Let me just show you guys quickly. Reset chart view. There we go. So the weekly highs and lows, I'm gonna use purple. Daily highs and lows will be blue, red for 4 hour highs and lows. The 1 hour high and lows that I will be consistently trading during market open will be white. The dashed line means it's the liquidity is still intact. The dotted line means it should be the other way around. Should be the other way around, guys. Um, yeah, I wrote this one just a bit when I was kind of tired, but it is what it is. Okay, let me go back into the trade. This trade was a bit advanced. I don't think like a lot of newbies can see it. Uh, and the fact that the entry was literally next to market open, was a little bit, like smart money tried to get to make it quick so that other people can't really get in. Um, but yeah, okay. So the daily liquidity got taken out overnight at 3 a.m. in the morning. Happened around here. So weird reaction, not really strong draw of liquidity. So normally when you take out a point of liquidity, you expect something to go down. Like you would expect the smart money people to drive price in a certain way, not just like I'll zoom it in. I'll zoom it in to see. Not like this, like choppy, choppy, choppy. You know what I'm saying? Like it's a clean trend to the upside. There's nothing wrong with that. There's nothing smart money wise in that. So yeah, okay. So we knew the news was around what 1:30. This is when the news happened. Okay, and we needed to see the latest trend before the news, which was bullish. And in that sense, I draw out the Fibonacci levels, which I care most about. The OT levels. I don't remember what it stands for, but it's basically a really good discounted levels. So for example, if you're trying to drive the price up and you're trying to profit off of it, you would want to manipulate it down here and then buy leverage from here. That's how smart money people operate. You know what I'm saying? So basically, if the narrative was bullish, um, we should have seen some sort of good reaction from these kinds of level. All right. So let me go into the 15-minute. I actually hate just looking at charts the day after. I hate looking at charts the day after. Okay, so we had a 15-minute fair value gaps. If you don't know what fair value gaps are, go look back into your fundamentals. You know what I'm saying? Basically, these two fair value gaps right here are the key fair value gaps to see if there were any sort of resting orders, waiting orders down at those levels to see if the narrative is going to be bullish for today. So if I were to see, okay, let me go back. I want to actually show you guys. So basically, the first fair value gap was around like 50% level here. Alright, so I wanted to see a really good reaction to the 50% level because most institutions they trade with robots and they would leave their resting orders at 50% and 61%. That's that's when we see a lot of robotic movement. Okay, when it first got to 50, it was a bit shaking. So it was kind of, when you see this kind of wick, it literally is uncertainty. When you see a long wick like this, it's uncertainty. There, it doesn't know when to go, where to go. It doesn't want to know if it wants to go down, it wants to go up. So you show the wick. People were fighting for it, and as it went to this level down here, um, the thing is, why did I say that it disrespected this level? Um, the thing is, it really disrespected the fair value gaps over here, but it's not that strong of a narrative. Of not a narrative. It's not that strong of a sign for us to be completely bullish. Oh yeah, I remember. Yeah, so it disrespected the fair value gaps in the discount level. Bear in mind, it's not just a 1 minute fair value gap; it's a 15-minute fair value gap. So it has way more confluence, and we should have seen some sort of tap and then bounce a little bit off, even if it's slight. You know what I'm saying? Because it's a 15-minute fair value gap. It has a lot of confluence, but to disrespect it, eventually it went up, but it looks a bit iffy, in my opinion. Apart from it, look at this level. It was a 15-minute order block. Um, 15-minute order block right here, sir. Uh, normally we would want to draw an order block when we have a strong move like this resulted in a fair value gap, if that makes sense to you. Here we are. So I marked out this level, the 15-minute order block. I'm doing a lot better today in terms of okay, in terms of navigating around the charts. Okay, so here we are, 15-minute order block. Over here, sold price tapped into it. Okay, why did I mark out this level? Was it? Oh my god. Sometimes I don't understand what I do. Why did I mark out this level? We'll leave it there for now. Don't really think that's some sort of Oh yeah, obviously it's a one. It's the 1 hour 1 hour high. It's a 1 hour high. That was really weird. I should add it to my thingy. 1 hour high, not get swept. So that means strong bearish bias, because as price tapped into the 15-minute order block, it went down a lot, like a lot, very quick. So the 1 hour high has not been swept. Strong bearish bias in a sense. Or maybe if it's not as strong, they can go back to hunt the stop and the stop. All right, so it is already in a really discounted level. Um, 1 hour high. I wouldn't say that's a 1 hour high. It's a point in between, but we'll see whatever. Okay, so it swept the 15-minute order block as a internal liquidity. Went to the downside. Over here, and we saw it swept the 1 hour low with a strong move. So we would mark out the 1 minute order block right before the manipulative move. You see it in my channel a lot, where I mark out the order block right before the move. So this smart money move swept at 2:24 p.m. It's a really common smart money setup where they try to manipulate the market before market opens. So it's in their hands. You know what I'm saying? So very sickly, we saw this order block respected with a wick, and also this thingy has tapped in the 15-minute order block. So it's basically a bearish move into the downside. And what really triggered my bias that day was the balanced price range. A balanced price range basically is an overlapping feather gap of different size. You see, this feather gap is a inverse feather gaps. This feather gap is feather gap. So when you price tapped in between the balanced price range, it would give a strong reaction to one of the. Actually, it would follow this feather gap, because it has to. You know what I'm saying? There'll be some sort of reaction. So basically, after this, we saw a really good reaction to the downside with this candle close, and we would enter off of here. Stop loss right at the first candle, and we would target the lows, the swing low. Come on, Mikey. The swing low. This swing low looks proper juicy, in my opinion. Over here, we wouldn't have got 2R. 1R would be fine. Might have taken profits from there. But here, that's what we do. 2R for the day. And yeah, not that deep. Not that deep. Nothing else. It was just that core retail sales might serve a lot more purpose on the on the day, as in like retail sales actually have high influence on the stock market. We need to pay attention to it. Yeah, it's a really advanced day when you see like levels disrespected hours before market open, you know, ping pong up and down, and then 15-minute order block tapped, um, and a lot of discounted level being involved. Even the balance price range, um, Is the entry today shows that it's a really advanced day. Not really a lot of beginners can do it. And yeah, that's about it. My crypto picks today, they're kind of red, but when you're in the game for that long, you will be happy when it's red. You will be actually be happy when it's red, because when the trend is not confirmed to be long, we would only be DCA. We only want to be DCAing into your positions. We don't want to go lump sum and then just wait as a hope. We are sophisticated investors. We would want to leave our money there, DCA in. DCA, if you don't know what DCA is, don't even invest, bro. Basically, that's these are my crypto picks. Really hoping it's gonna do well this crypto bull run because I've done my research. All the leaders are the big sharks, bro. And yeah, Ethereum. When Ethereum gets to this family gap, I think it eventually will. Here, I'll go crazy. I'll just put everything. I'll be fully positioned because since ETF, since the introduction of Ethereum ETF, we always see this kind of respect movement from the weekly family gaps, and I really want to be part of the next one. So that's it. That's my narrative. You can choose to follow it or not. Again, not financial advice. You always should do your own research on the markets, any investments. Um, so yeah, I'm gonna have to go Rome. I'm gonna have to go Rome Central. So I'm gonna see you guys in the next video.